Hello and welcome. You're watching Business Plus. After a year-long wait, gold is once again shining and shining bright. The prices of precious metal touched a lifetime high of 60,100 rupees per 10 gram in New Delhi yesterday, and strong global trends, festive season, global volatility are the reasons for it. Since achieving the feat, however, gold prices have corrected marginally and are currently trading at 59,000 mark. Year to date, the yellow metal has surged about 8%, outpacing Nifty, which has given negative returns of 5% in 2023. With the US to Europe banking crisis already firing safe havens, buying on all cylinders, gold seems to have upward momentum on its side. Joining us in the newsroom is my colleague Kartik Malhotra. Also joining us very shortly is Anuj Gupta. Kartik, I want to come to you first. What's driving the interest in gold?
Very interesting question, Shweta. And often one tries to believe that gold has an inverse relationship with stock prices, and gold also has an inverse relationship with interest rates. So in a typical scenario, when you see interest rates rising, you see gold sort of, not rising in equal measure, if anything, falling down. So it's an interesting situation to be in. Now, what we have seen of late, of course, is the fact that gold has reached the 60,000 level, and it has slightly come below that, as you mentioned. But if you look at returns over, let's say, a 5-year, 10-year, 15-year horizon, over the last 5 years, and maybe we can have graphics also, as I read out these numbers, over a 5-year scenario, gold has given a CAGR return of about 15.15% versus Nifty giving a return of 10% in the same period. Over a 10-year horizon, gold has given lesser returns than Nifty at 6.87 versus Nifty giving 11.15. And over a 15-year period, gold has given a return of about 12.16% versus Nifty at about 7.02%. Now, this becomes relevant today because we are in a high interest rate cycle, and at the same time, globally, markets are not doing too well. So I think the question really to understand and ask here is that are we in a situation where gold has once again proven to be the safe haven when markets are dwindling? We've seen the collapse of SVB and the whole banking crisis, which hasn't yet turned into a catastrophe, but we've seen a crisis which has led to markets bleed. Is that the real trigger for the yellow metal to shine? I think that is what we need to explore.
Okay. Anuj is joining us. Anuj Gupta is the Vice President of IIFL Securities. Anuj, thanks very much for taking time out. I want to come to you with the same question. What exactly is driving interest in gold? As Kartik mentioned, it appears that gold is once again a safe haven.
Exactly. Safe haven demand is always, drive the gold prices. If you check it, gold since 2008, when we saw the recession, and at that point of time, we saw that gold increased by, 28%. And after that, 2008 till 2014, it gives a return in 2 digits. So, historically, we saw that gold giving a result, giving a positive return at the time of uncertainty and at the time of, the slowdown in the economy. The recession we have seen, and it's proved that whenever we saw any kind of disruption in economy, disruption in financial market, disruption in geopolitical tension, gold gave a return. And if you see from year 2019, where we had the corona pandemic, at that point of time, even gold given a 2-digit kind of return. So in last 4 years, we have seen that gold increase tremendously, and right now in this year, if we talk about 2023, it's give almost 10% kind of return. So gold is a product which is, hedge against inflation, hedge against uncertainty, and definitely it is a safe haven when we talk about any financial crisis. In 2008, we saw Lehman crisis, and right now we are seeing a banking crisis. So crises both are just like a same kind of thing, financial crisis. And at that point of time, we have seen gold increase sharply.
Okay. So is investing in gold a good idea at this point in time, or should one wait for price correction?
As we are seeing that this banking crisis is still remain in the economy, and definitely we are just 1 day prior before the FOMC meeting, and we are expecting some kind of relaxation, some kind of kind of program or some kind of fundraising program by the FOMC, and also we are expecting that their interest rate kind of thing maybe peak out. So still gold is looking positive because US economy again in kind of slow down because.
Okay. It feels like we've lost Amit at this point in time. Karthik, Fed rate hike decision likely to impact gold. How cautious should one be?
So Shweta, I believe that that usually, the inverse relationship, and that is what I wanted to sort of ask Anuj before we lost him. The inverse relationship is usually true. What happens is, in a high interest rate scenario, you find out the fact that you understand that gold becomes a safe haven when interest rates are low. Right now, in a high interest rate regime, there is a better likelihood of somebody investing in investing in fixed deposits, which are sure to give you assured returns, which are of course going to be higher than any other risky asset, whether it is stocks or any other commodity. So in a high interest rate scenario, people usually go in for government backed securities like fixed deposits, and not as much for the yellow metal. So I think what has really happened this time around, of course, we've seen the interest rate rise for the last 1 year, and Anuj had just mentioned the FOMC tomorrow, and we think that there is going to be a 25 basis point hike yet again. However, if you look at gold for the last 6 months, it has more or less been flat. We've just seen this spike suddenly from last week, which I think is not directly correlated to high interest rates, because prices had been stagnant, range bound for almost 2 years now. I think the last spike we saw was between March 2020 to November 2020. Those 6 months where we saw every 10 grams of gold prices shoot up from about 43,000 rupees all the way to 53,000 rupees. That's the kind of sharp, steep sort of line we saw on the graph on gold. However, I think for the last 2 years, the gold rates have been more or less range bound. Specifically for the last 1 year, they've been in the range of about 53 to 58,000 or so. So I think this sudden spike doesn't have as much to do with interest rate hikes as to do with stock markets not taking the pressure of banks sort of going down every now and then. But I think Anuj is back with us. Anuj may be able to enlighten us. Anuj, usually gold has got an inverse relationship with interest rates. In a high interest rate regime, you see gold prices go down. But for once, we have seen that while consecutively there has been a rate hike, over the last 2 weeks or so, gold prices have also gone up. So why is this contradiction to the inverse relationship between gold and interest rates?
When we saw a relationship between the US dollar and the interest rate. So here FOMC, I think we can say that FOMC or Federal Bank is not able to judge the inflation correctly, because inflation is basically that driven from the nature. But right now here the inflation, or we can say that the slowdown is made by the man, because Russia-Ukraine war is the basic thing which is lead the inflation kind of thing. So here in a single year, FOMC increased interest by almost 5%, where all the central banks are not in such kind of hawkish statement. So FOMC, I think, not able to judge the predict the inflation which is laid in the US market. So right now we have seen that in a one basket we saw the US, and other buyer we have seen whenever they increase the interest rate, all the asset class were falling. So in the month of February 2023, we saw that gold made a high of 58,000 and again made a low of 54,000. But right now, whenever the banking crisis, seeing gold prices increase from the lower levels till made a new lifetime high. So definitely inverse relationship is there, but still we are saying that gold is a product which is investment product against the uncertainty and also again the opportunity of the investment. So as people are seeing that central banks are buying gold, we have seen the last year China also bought gold last year, central banks as also bought gold last year. So people are also seeing in that way also that whenever when central banks are increasing or adding gold in their portfolio, so why not individual add gold as in the portfolio? So as an investment also as against the the interest rate. So gold is a product which is working in the both side. It also increase their investment demand also, and also it increase their safe haven demand also. So here we are seeing that in a both way gold adding shine in the consumers portfolio.
Okay. One of the big debates over the last few years, Karthik, has been, should one buy physical gold or invest in paper gold through gold exchanges, sovereign gold bond? What's your take? Some of the key associated risks with both physical and gold bonds, if you could highlight for the benefit of our viewers.
Shweta, I'm not really, an expert, and I'd rather refrain from giving advice on whether or not to invest in gold. But I think if somebody has taken the decision that yes, gold needs to be part of her or his portfolio, I feel sovereign gold bonds is definitely a great option. Why is it a great option? It's a great option, A, because you're not worried about the authenticity, quality, hallmarking of the gold, right? It comes with a sovereign guarantee. Secondly, if you think that since you've made the investment and you've decided to go for a gold investment one way or another, I think the underlying assumption is that gold prices are going to rise over a period of time. Now, along with the appreciation of the price of the yellow metal, what sovereign gold bonds also give you is a 2.5% annual interest over and above whatever the appreciation has been in the gold prices. The third advantage being that the returns on the sovereign gold bonds, if you sort of fulfill the entire tenure of holding it for 8 years, the returns are completely tax-free. This compared to, let's say, physical gold, there is obviously always a risk of safekeeping, there's a risk of quality, purity, etc. And at the same time, when you go and resell it, even if rates have fluctuated and your investment hasn't really paid off great dividends, at least the 2.5% interest rate in the case of sovereign gold bonds will make sure that you don't lose too much money. Okay. But I think Anuj might be able to answer that better. Anuj?
See, in the general market, there are many products are available in the gold side. Definitely, physical gold is available, which is very fascinating. Every customer, including man, women, and even child also. But if we talk about the investment side, so definitely gold ETF is there. Sovereign gold bond, which is very fascinating the customers, and we have seen a very huge investment in the sovereign gold bond in terms of money. Because it gives a guaranteed kind of return, and it is also backed by the Indian government. So that's people are investing in the sovereign gold bond, and definitely MCX gold, which is very fascinating the traders who wants to trade, who want to catch up daily momentum in the gold prices. So every customer has a different product, and in the market we have a different product on the basis of the customer. So if a customer want to do trading, there is a MCX gold where he wants to trade in option trading and future trading. But if somebody wants to get investment for a longer period kind of thing, 5 to 7 years, so definitely SGB is there, sovereign gold bond. If somebody wants to hold gold in their demat account, so there is a gold ETF is also. And if somebody wants to buy a gold for their physical use or physical investment, so there is a physical gold is there. So gold definitely is a product which is available in every denomination, and every it is fulfilling all the desire of every customer. So gold, suppose I think if somebody wants to gold investment for a long term perspective, so definitely he can go for physical gold as well as the sovereign gold bond, where they are getting they will get guaranteed kind of return and even a tax free return.
Okay, Anuj, what's your long term outlook on gold at this point?
See, I am very optimistic for the gold prices because uncertainty definitely is there, and we already seeing the Russia-Ukraine war is there, and Federal Bank is very very hawkish still looking there, and there is also concern that I think the interest rate of the US maybe peak out, and the unemployment rate again we are expecting increasing due to this banking crisis. So this will give fuel to the gold, and my view, if we talk about till next Diwali, coming Diwali in 2023, gold may test 62,000 to 65,000, and in dollar terms, we are expecting that it may test 2,100 to 2,200 $. So, as far as concern about the demand side, I am very optimistic from the side of central banks because they are adding gold in their portfolio, and I am also expecting that in this year also they will again add gold in their portfolio. So the central bank demand for the gold will increase in this year also, so that will also provide the fuel to the gold. So my view is very optimistic, and I am expecting that gold may trade 62,000 to 65,000 in this year.
Okay, optimistic outlook there on gold. Thanks very much, Anuj, for all those details. Thanks, Karthik, for joining us. We're going to shift focus for now. Earlier today, the IMF board approved Sri Lankan government's request for a $2.9 billion bailout. The program will enable the country to access up to $7 billion in overall funding. This clears the way for release of funds and kick off a 4-year program designed to shore up the country's economy. The decision will allow an immediate disbursement of about $333 million, the IMF said, and will spur financial support from other partners as well, potentially helping Sri Lanka emerge from its worst financial crisis in decades. Okay, joining us at this point in time is Rohan Samarajiva, our founding chair of Learn Asia. Also joining me in the newsroom is my colleague Rakesh Kar. I want to come to you first, Rohan. What took IMF 1 year to release the relief package?
Well, we went to the IMF in, my recollection is March, April. Things were very rough here. We had changes in prime ministers, changes in presidents, all kinds of things. We got really serious about this in September 1, when the staff level agreement was reached and published. So from then it was about 200 days, which was, in my opinion, quite a long time. The sticking point, as many people know, was the Chinese letter of credible and specific assurances. Now, when we finally got that, within 2 or 3 days, it went to the executive board.
Okay. I want to come to you, Rakesh, at this point in time. Explain to us what really happened with Sri Lankan economy there.
Well, I mean, first of all, I think the good news is that the bailout has been, so to say, approved, but it has to be put in context. As our colleague from Sri Lanka mentioned, it's been very rough in the last few months for the Sri Lankan economy, and the government there is partly to blame. In fact, actually wholly to blame, because the default has happened, and default is unprecedented in recent times. And we must note that the current bailout that has happened, that's the good news. The bad news is that it's come with a lot of riders, and those riders are not easy to navigate given the current situation in Sri Lanka, which has improved in terms of the citizen engagement and overall governance factors. The caveats are so strong. For the first time, I imagine that IMF has said that this is conditional to the fact that there is no corruption in the country, which in itself I think is unprecedented, because IMF asking for a guarantee on a corruption-free environment to ensure that this bailout is administered over the next few years is so difficult to enforce. I really don't know how IMF is going to enforce that particular caveat. And the second one is again very tricky from the policy framework. IMF says that it has to be followed by what we call stringent tax reforms. And inherent to tax reforms, which were, so to say, tried and aborted, was the fact that you have to be tough and do away with the subsidies, which angers an already irritated and aggravated population. So in that sense, the good news is that it has happened, and it raises hopes of financial stability in the region. But adhering and managing this particular piece for the Sri Lankan government is not going to be easy, because I don't know how they're going to hold that promise of no corruption. And also, most importantly, if they really embark on the path of reforms, especially in taxation, then again, engaging with the citizenry meaningfully without them getting absolutely unhappy with the diktat is not going to be easy. And as it is, the timeline for the Sri Lankan economy to completely move away from the default situation is said to be, on a positive estimate, 2026. So that's how we are placed. But on the interesting part is, with all these caveats, with all these challenges, this has happened. It has taken so long, and there is some amount of equanimity between the IMF and the Sri Lankan government. And so there is a trajectory that we can follow. For me and for India, I think particularly, the good thing is that Sri Lanka has been extremely positive about India's support, but we couldn't have engineered the IMF bail-in. What we did, we supported them independently, and they have put on record India's support. The good thing possibly with the IMF bailout is that Sri Lanka will slowly but surely, to my mind, and hopefully for India and the environment, move out of the debt virus that possibly China got it into.
Okay. We'll talk about the role of China, but it's going to be a difficult and long road ahead. Yes, please, Rohan.
I need to correct something. The IMF conditionalities do not say you have to get rid of corruption. What it says is that there has to be a anti-corruption diagnostic, and that anti-corruption measures have to be taken. I have studied this and I have actually read the act. So the law, we had an anti-corruption law which had been completely drafted by 2019, and then it had been put in the deep freezer. So that law is coming in the next 2 weeks. So that is the kind of provisions we are talking about. We are not talking about somebody having to say we are not we assure you there is zero corruption. And the other thing is I'm a little disturbed by the photographs that you're using, the videos. These are all 1-year-old videos. I have to tell the audience that nobody is setting fire to anything these days. And that while the tax reforms have gone through, they have been done already. Nobody is setting fire to anything. Doctors are protesting very politely. They're having meetings with the president and so on. But we are not having street fights over taxes. I think we need to make clear that quite a lot of the images that you're seeing are from 1 year ago, not from today.
Absolutely, I think you have a fair point. The images, and we all know back home here in India that things have improved dramatically over the last few months. We don't have the latest visuals, but we'll update the visuals as and when we get them. And as regards the law that you mentioned, I'm happy that it's coming. But the matter of the fact is that for the first time in an Asian economy has been, so to say, there's a judgmental perspective from IMF when it says that we're going to run a government diagnostic, kit on Sri Lankan economy. That's the wording that's there in the statement issued by IMF today.
We welcome that. Actually, these were things that we were doing on our own, and to have the backing of the IMF on this matter is perfectly all right with us.
Yeah, absolutely. We are also in sync with Sri Lankan getting faster than expected on track in terms of its economic growth. And it makes sense for the entire region to be economically independent. And ideally, we should not have any bailout required for any of the countries in the region. And I think India has stated...
These kinds of diagnostics have been done in Africa.
Yeah, it's the first Asian economy to undergo that diagnostic.
Yeah.
Yeah, and I'm hoping that sooner than later this diagnostic, is removed, given the overall commitment of the Sri Lankan people, the citizenry, and the government to try and get back on track.
Not a vindication of how good or how far the country has progressed, but I also want to bring in China at this point in time, because China has played a big role in rebuilding the island nation. How do you see relationship with China progressing, as China being your biggest bilateral lender at this point?
I think it's a central relationship. I think we need to look after it. I think we need to nurture it. In my view, you see, I am of the opinion that it's our politicians, our government decision makers who decided to take some of these ill-considered loans. So nobody came and held a gun to our heads and said, take this money. We took this money. So I think now we are putting in precautions, we are putting in safeguards about feasibility studies and things of that nature. And I think we need to be responsible for our actions. And I think we need to work with China to make sure that we work out a solution on the debt that we have taken in the past.
Couple of points, right there on the ground, you're there, what is the kind of messaging you're getting? Is the citizenry, how is it looking at this bailout that has come out today? And is it convinced of the government's efforts to try and, rid itself from all practices that it's alleged to have committed in the recent past?
Well, look, the three key factors about one of the causes, right? So our fuel supply has been now on a formula. There's no more government subsidies on diesel or petrol. It's expensive, doubled in price. Household cooking gas is no longer subsidized. It's also expensive, but it's available, right? And then, so that has been done, and there's no fuss about that. Then electricity prices have gone up, according to one calculation, by 66%, right? Electricity prices did not change from 2013. So for 10 years, they were static. And now they have gone up by 66% in a few months. So because of this, the pressures on the government, the exchequer, the fiscal pressures have been lessened. Taxes have been basically restored to 2019 levels because we had a radical cut in taxes in 2019. All that has been reversed. Now, of course, the difference is that in 2019, we had a much better economy when these levels of taxes were in play. Now we have people who are hit by inflation, increased fuel prices, increased electricity prices, increased water prices, etc. So this is really hard on people, right? There's no doubt about how hard this is. But the government is holding the line. I personally was not optimistic that they would be able to hold the line, but they're holding the line, right? So I think that if we get over these next few months, we have a very good chance of executing the remaining conditionalities. These were all pre-conditions, right? We fill these things and therefore we got the money.
Good. I think, with the IMF bailout announced today, the government has a great opportunity to go to the people and say that, we are on track and the world is looking at us in that perspective. It's not just the Sri Lankan government which is saying that we're getting on track. You mentioned China as being, supportive, and India also has played its part. How do you look at, Indian support in terms of financial matters and economic matters going forward with the, the package having been announced today by IMF?
I think there's almost universal appreciation of the critical role that India played in helping us get over the hardest time periods. And I think there has been a strategic plan to handle the Sri Lanka-India economic relationships. And that plan is being activated and implemented, particularly in areas such as energy and investments and so on. I personally have been involved in the negotiations with India on trade from 20 years ago, and we were having all kinds of resistance to that. I believe that finally that resistance has been dissolved, and we will move forward with a trade agreement. So in my view, I think the whole relationship with India has never been stronger as it is now. And we need to build on that. We need trust building measures on both sides. And we are, of course, the president has said, and I personally will say, from my behalf, we are grateful.
Okay. Rohan, before I let you go, just one last quick question. What are the key economic growth drivers that the country is looking at this point in time? What are your challenge areas, and what exactly is the government's focus areas?
Growth. We need to get to growth. But remember, we have a whole series of things to do before we get to growth. We are still in a contracting economy, right? So we need to get out of the contracting economy and we need to start expanding. And the good signs that we see right now is tourism is coming back, remittances are coming back. I've been told that even the IT, BPO sector, the revenues are on the upswing, even though we were very worried because of the brain drain that would be a difficult area to get back to normal. But we need to get everything going, We need to do exports. There's no ifs and buts about it. And we need to diversify our exports because we can't be cutting imports. We need to expand on the export side. That is where the trade agreements, there are 3 trade agreements being negotiated. One with India, which is the very first agreement that we had, which is about expanding that agreement. One with China, and I think there are some very interesting and useful synergies between the two. And a third with Taiwan, with Thailand. We already have one with Singapore that has been activated. So in order to get those opportunities, realize those opportunities, what we need is, we need our industry to be free of the 30% interest rates that we are suffering from right now. 30%. You can't do business when you have to pay 30% on your working capital. So that is the part of the recovery that we are really focusing.
Right. Rohan, thanks very much for joining us with all those details. We're going to move on to another important story that we're tracking here. The Indian aviation sector is buzzing again. After a volatile last few years, the sector is looking to turn a corner on the back of record plane orders and a growing aviation market, tipped for exponential growth in the next decade. Newsline Live is tracking all the developments in the aviation space. My colleague Shomolo caught up with Rajiv Bansal, Secretary, Ministry of Civil Aviation, to know what the outlook is and how the sector is placed to tackle operational headwinds. Listen in.
We are at the CAPA India Aviation Summit 2023, where top leaders from the global aviation space have converged to deliberate and speak about issues that are affecting the sector in a post-pandemic world. Earlier in the day, we had Mr. Rajiv Bansal, Secretary in the Civil Aviation Ministry, speak about the sector's prospects in the country and what are the challenges and opportunities that lie ahead.
Only good times lie ahead for us, because the demand is so much that in our sector, multiple carriers, both low cost as well as full service carriers, can exist and will exist. So yesterday you had CASA CEO also saying that they plan to launch international operations by, I think, October or so this year. So an airline which was born during COVID times, and within 1 year they have inducted 20 aircraft and are ready to fly internationally. So I would say that we comfortably, the Indian aviation landscape comfortably can have 7 to 8 carriers, which is the position as of now.
But do you see, I mean, there's not much that the government can do about the operating model, and if you can use Richard Branson's quote. But how do you think the government can help in other ways to ensure that the stakeholders can at least survive, if not thrive?
No, why do you say the government cannot do anything? The government can do and is doing. We've been taking up with all the states to lower the VAT on ATF. VAT is a very important cost component for airline carriers. And happy to report that most of the states in the country, barring 4, have reduced the VAT. Recently, Maharashtra reduced the VAT. Just before that, Rajasthan had reduced the VAT rate on ATF. So our persuasion has helped them to reduce it. Creating infrastructure, airport infrastructure itself is something that the government is doing, whether through airport authority or through private, through the PPP model. That itself provides support to the air carriers to grow.
And so final question, the railway tickets for Rajdhani is way expensive than an air ticket right now. Do you think the airlines have been able to wean away that set of passengers, considering that the Udan scheme is also being given thrust by the government?
Yes, definitely. So actually, you know, what comes out in media often and is reported is about the highest fare bracket. Tickets are sold in something like 16 fare buckets. And I would feel that the lower couple of fare buckets on any kind of a Delhi-Mumbai or a Delhi-Bangalore sector are comparable to the AC fares of train. So it's only in the higher fare buckets where they may be higher.
We continue to track that very important story. My colleague Shomala is here with me in the newsroom. Shomala, I want to understand from you the big takeaways from that big conference/meeting that you were a part of today.
Hi Shweta, thanks for having me on the show. Yeah, the messaging from the Civil Aviation Secretary is the same as that we've been hearing from the ministers and the top officials of Air India, is that growth is the only way forward, and they are aggressively doubling down on the infrastructure, and they now, under the Udan scheme also, with the government also placing its thrust on that, they want to cater to a new section of passengers who have not been significant air travelers. They want to ensure that the Aam Aadmi also shuns railway and takes to the skies, and it is good for the society and in general for the sector, which has been under the cosh for the past few decades, if I may say so. Okay.
S.S. Panesu, who is an aviation expert, is also joining us at this point in time. So thanks very much for speaking to us. Your outlook on the aviation sector: we are looking at a sector that is fast expanding, but also is reporting consolidated net losses up to $1 billion.
Let me tell you, I must appreciate the way aviation is expanding in India, and we are going to be one of the largest country with having aviation sector in India. But unfortunately, which I have seen in the past, our regulatory body and the other thing, they are not expert to cope up with the aviation. Air India has ordered 470 aircraft. I must know they must have planned how to train pilots, 470 pilots to train on these aircraft. Number one. Number two, the regulatory body, not a single person is professional in investigation of incident, accident, and making rules for safe aviation in India. We have a Director General of Safe Aircraft Accident Investigation. She has never seen an aircraft. She's not an aircraft. Now, what investigation they will do it? You see, we need experts in aviation who can improve the standard of aviation. I took up the matter with Ministry of Communication. They take pilots exam for radio telephony, and they never seen the aircraft. They never operated RT. They give me in writing. We have not experienced. This is the way they're going to check the pilots. See, the safety is the prime importance in aviation. When you increase the aircraft flying is congested, the safety is the paramount important, which I'm sure the government should take interest in improving the flight safety standard and taking into cognizance the past incidents and all that, and improve the things going on in the regulatory body. Examination of pilots, engineers, they have to have an experts. We have experts in India, but I don't know why the system is not being changed till today. You see, today the safety standard is not up to the world market. We have to improve on that and give a confidence to the traveling people that our airline is the safest airline. Now, Air India, they have got professionals and they have ordered 470 aircraft. They must have planned their training and all that because you can't produce a pilot in an incubator. He requires a training. It gives a lot of period before he is trained as a captain or a co-pilot. So we have to work on those lines immediately because the way aviation is expanding, and you see, we are fulfilling the image of our Prime Minister, where he said Chappal Wala will also travel. But look at the fares. The fares are touching the sky. Why fares are being regulated to a certain point where the airline also makes a profit? Mm-hmm. The airline fares are not being, I know in Indian Airlines, the fares were controlled by the government. They could not even charge 1 rupee than decided by the government and the airline. But today they can charge any money. Now where are the Chappalwalas going to fly that airline? It's a good thing that we are opening aviation sector, and it's a big credit to our country that we are connecting the world, and all the big cities of the world are connected by India. In COVID period, we handled our minister handled very well the traveling of the COVID passengers from India to other country and other countries to our country. See, you have to have a planning. But in my opinion, the safety is the paramount importance, which the Ministry of Civil Aviation, regulatory body, and all the airlines have to get together and improve the standard of safety and bring the confidence. Because recent past crashes and all that, they were absolutely, very sad incidents. And nothing has been learned out of these incidents. And the people who have investigated those incidents, they have never any experience of investigation. They formed a board of 7 people with Honorable Minister of Civil Aviation, DGCA, and former Chief of Air Force. They have never flown any high-tech aircraft, and they gave implementation of the aircraft. Our former Chief of, I won't hesitate to give his comment, he said today the bureaucrats are only looking after the minister's health and all that. They are not concerned about their department. Okay. But in my opinion, I only pray they rise to the occasion, and safety is an important. One person has commented, if you think safety is expensive, try an accident. You will come to know which is expensive.
Okay. Mr. Panisa, I'll come to you in just a bit. I want to come to you, Rakesh, at this point in time. What do you make of the challenges highlighted by Mr. Panisa here?
No, I think Mr. Panisa has, has spoken about some ground realities which are absolutely true. At one level, we have a huge potential for this particular sector. It is employment intensive, it is technology intensive, it is economic growth intensive, but there is a huge lag in terms of basic business to consumer orientations that Captain Panisa mentioned. The challenge is that how do we bring about a betterment in the overall ecosystem. I want to take you back to the, I'm playing the devil's advocate more than Mr. Panesar. If you look at Indian private sector aviation, it's been a graveyard of reputations. We have lost so many airline companies. I'm not talking about lost aircraft. We lost so many, right from the era when we announced the open sky policy, which led to the induction of the first private airline called East West Airlines, till the time we have today, 3 or 4 players. It's been a story of airlines going bust. And we today are also, as you rightly mentioned, $100 billion plus losses. So if we don't have a healthy airline sector, which it means healthy airline companies, barring Air India and Indian Airlines, which were run by the government so far, now they are in hands of private sector in Tatas, who do you expect to invest in the core infrastructure? So that's the key point. And today, again, unfortunately, we are at a situation where we have just 2 major airlines. We have Tatas now doubling up as with this Vistara, Air India, Air Asia, Air India Express, so a omnibus big entity, and Indigo. And then SpiceJet is bleeding, and Aksara hasn't taken off, Jet Air hasn't taken off. So a market which is projected to be the 5th largest in the by the end of the decade has just about 3 players. Okay. Or 2 players to be precise. So that graveyard syndrome, we have not been able to come out of that, and I'm worried until we allow the private sector to be on its own feet. For that, it's not, we need to create a conducive environment, which would always put the onus of safety training on the companies which run these airlines. That's one. Second is that I think from the government's perspective, whether it's keen and this Hawaii Chappal thing is a very noble thought, it has to be matched by action on the ground. The problem with the policy framework is that we are doing catching up rather than being ahead of the curve. If we know that India is destined to be one of the largest markets, why are we not planning ahead of the curve rather than just catching up? We have now, after such a long delay, coming up with 2 new airports in Bombay and in near UP, Agra. So I think in that sense, what is happening is that we need to plan ahead with the government and all other stakeholders coming into the fray.
Okay, plan ahead. That's the big message coming in at this point in time. Captain Panesar, Rakesh, thanks very much for joining us with all those details. Moving on, the Federal Open Market Committee FOMC meeting is scheduled for 21st, 22nd of March, which is today and tomorrow. During these 2 crucial days, the FOMC will discuss and decide on economic policies, including potentially raising interest rates to control inflation in the US. The meeting is all the more important for the Fed officials will have to decide whether to ignore the recent failures of the 2 US banks and concerns about a Swiss bank, either to hold interest rates, to give financial systems some time to stabilize, or focus on combating inflation by raising rates as planned. Now remember, in the last meeting, the US Feds raised interest rates by 0.25 percentage point, bringing the Fed fund rates in the range of 4.50 to 4.75. Previously, the US Fed gave 4 consecutive 75 basis points rate hike and then a 50 basis point increase in December, followed by a 25% hike in 0.25% hike in January. The Fed will release the summary of economic projections, which will also provide insights into policymakers' view on interest rates and the US economy for the remainder of 2023. So that, of course, is the big meeting that we'll be tracking here. With me, my colleague Karthik and Rakesh continue to be here in the newsroom. I want to come to you, Karthik, first. Some industry experts are looking for a Fed pause, while others are expecting a 50 basis point rate hike. It's going to be a crucial balance for the US Fed.
Honestly, I'm just looking at the reaction, the facial reaction of Jerome Powell. Who would have, who would have thought how this last 1 month is going to unfold? I think in the last FOMC, there would have been no whisker of any inclination whatsoever that we're going to see 4 large banks in the US go down. And Credit Suisse, one of the largest, 30 largest banks in the world, actually be bought by its rival UBS. Now, what should one expect from the US Fed is something which I think is fairly obvious right now. Inflation is high, and it is higher than the threshold that the US Fed has set for itself. Will inflation have to be cooled off? The answer is an obvious yes. Does the Fed have anything in its arsenal apart from raising rates again? Unfortunately, the answer is no. So how much of the rate hike should one expect? I think no point speculating and taking a guess. There are estimates that 25 basis points, quarter of a percentage, is what one should expect. Will that really come through tomorrow or not is something that we will have to see. Obviously, there is merit in the Fed trying to extract more liquidity from the market to cool off inflation. That can be done through a rate hike. But of course, we've seen how rate hikes have really impacted the markets and the overall banking sector as well. So one will only have to wait and watch.
Okay. Amit Gupta, who's the CIO of FinTech Capital, is also joining us at this point in time. Amit, thanks very much for taking time out. It's going to be a dilemma for the US Fed whether to contain the ongoing banking crisis or to contain inflationary pressure.
Yeah, hi, thank you for having me. Yes, usually, 2 days before the Fed meeting, the probabilities or the Fed future rates are trading at 100% or 0%, which would mean that there is a 100% chance that they are going to move interest rates, or a zero chance that they are, not going to move. I think this time the uncertainty is quite a lot. The probabilities are, sort of 60-40 of making a move and not making a move. Which means that it's really up in the air what the Fed is going to do.
Okay. Karthik, even markets cannot be shielded from Fed's predicament, and it did show up on the markets today.
That's right, Shweta. I think an obvious victim or beneficiary of movement in rates are obviously the markets. I think the markets are also pretty much prepared for a rate hike. So whatever movement in the market had to happen with respect to the rate hike, I think would have happened. And what we will eventually see tomorrow is going to be maybe just a little deviation from the trend that we have seen already. So I don't think the markets are going to be in for a shock or a surprise one way or another. There are expectations of a 25 basis points rise again. So markets will have to live with that, it seems.
Okay. Rakesh also continues to be with us in the newsroom. Rakesh, what is the stance expectation as far as FOMC is concerned?
I would go with what our expert on the show has said and Karthik has said. I think, without getting into specific figures because we don't have exactly an idea about how do they perform it, but it's clear that there is pressure, so they'll have to make a choice, and a hike is quite likely in this case. I'm only on a lighter note happy that the Indian, central bank, the Reserve Bank of India, when it meets, they will be much less stressed than their counterparts in the rest of the world. So that's the good part. I think apart from sitting and just taking a view on the interest rates, I think the entire banking ecosystem in the US and across the West has to do some very, very serious introspection. And that's the good news for India. Mm-hmm. So far, so good. Okay. We don't have to really worry too much about a collateral damage to our banking system, yet stay focused on taming inflation.
Okay, Amit is also here. Amit, given that macro environment is improving, is it too early to call what the hike would be, if any at all?
So we need to understand the background here. The US economy is currently going through a period of economic degrowth and financial instability after these recent bank incidents. So all the historically critical growth areas of the US, whether it is consumer spending or housing or manufacturing, all these are actually showing signs of recession. The only silver lining is that we still have a strong US labor market, though one can argue that this data works with a lag. But we have seen a lot of layoffs in the tech sector in US, also in India. And now this banking sector crisis, I think we are going to see some layoffs there as well in the near future. The second thing is that inflation is quite high, still quite high in US. It's almost 6.5%. So the Fed will be very reluctant to cut rates and go on an easing path. But with so much demand destruction, which has already happened in the last 12 months since they start rising rates, and now we have sort of started getting weak economic data, especially in the housing market, I think inflation can cool off further. But the Fed is basically trying to juggle two balls. One is to save the financial system, and second is to control the inflation in the economy. And I think for this particular Fed meeting, they'll go with saving the financial system gains. So there is a possibility that rate hike needs a pause. So there could be two options. One is you hike by 25 basis points and then you put a stop to the rate hike cycle. Or second could be you straight away go to the pause and hint that we are going to take it as the data comes in. So my sense is they'll do a 25 basis point hike to just to just to have cover on their credibility. Because remember, before this crisis, the market was actually pricing in 50 basis point rate hike when the Jerome Powell gave a testimony in the Senate. So from coming down from 50 to actually going to pause is a big step. So my sense is they probably 60% chance of them hiking the rates and then putting a stop to the rate hike cycles, and then hoping that the lag effect can bring down inflation in the next 2 to 3 quarters, assuming there are no further surprises.
Okay. I want to bring in India perspective at this point in time, and we're playing the graphic there of RBI versus US Fed hiking interest rates. It seems that there is a clear correlation, Karthik.
There always is, and it's only sort of expected. I don't think there's a big surprise here because one way or another we are living in a sort of interconnected world, and we can't absolve ourselves completely of the shocks that happen in the rest of the world. So I think it's fairly obvious. Inflation, one part of the world, it trickles down to another part of the world. There's a stock market bull run in one part of the world. More often than not, if fundamentals of the world are sort of equated and equally aligned, more often than not you see a bull run. So bull runs, bear runs, rate hikes, gold prices, all of that is, we live in an interconnected world. So yeah, the fact that that US Fed has been a little ahead of us just sort of helps us also understand what's the mood of the Fed in the US and take action accordingly. But I think India would have had to react one way or another, even if US wanted its inflation to continue soaring, which in the unlikely scenario ever. India had to tame its own inflation as well. So rate hikes in India would have happened irrespective, but yeah, that's not to say that that US would not have wanted to sort of act on its inflation figures. So obviously you see that correlation.
Except that as of now it looks like India has managed inflation better than US.
That's right.
All right. We continue to track that story very, very closely. FOMC meeting and its updates will be coming in later today and tomorrow. We'll bring you all the details up here on News9 Plus. Rakesh, Karthik, thanks very much for joining us in this newsroom for this bulletin at this point in time. And with that, it's a wrap. Thanks very much for watching. Stay tuned.